Hi guys, thanks for tuning in to another episode of Nuggets News. Well, another big week for Bitcoin and a bit of a mixed week for altcoins. We had Chainlink up over 100%. That's one that we've been following for a while in our group, and I'm going to talk about that. Amisa Go, one of my favorites with my hoodie on here, also had a big week, but we're still waiting for altcoins to have their time in the sun, or Altseason as some people are waiting for. I'll talk about that a little bit more at the end. We do welcome another 1,000 subscribers this week. It's great to see people pouring in and plenty of people into our premium group. And this week I've started diving into the RSI. It's probably the number one tool I use for my trading strategy. And this week has been a fantastic week for trading with that volatility, the bounces and the extremes of the RSI. Just a reminder that today is the last day to sort your tax out and get your portfolio all right for June 30, and we recommend Crypto Tax Australia. You guys know that we don't do any paid reviews or interviews on this channel, but we are happy to be sponsored by great Australian businesses who provide good services, such as New Brighton Capital, who have again come on recently, and we're more than happy to recommend these services that are ATO approved. We've sent dozens or even hundreds of people there now. We've had nothing but good feedback. So if you guys are looking to put a little bit in your super and build that long-term nest egg, we do recommend New Brighton Capital. But into the Australian macro news. So legendary investor Ray Dalio is now warning that the housing boom is over. So it's getting global attention, the Australian housing market. He's done a fantastic piece about how the economic machine works. It was one of my top 10 finance and economics documentaries that I recommend you do watch. We've also got the numbers out that lending has hit the lowest rate in more than 40 years now. So Martin North and I talk about the rate of lending growth and how that rate has to continue to expand with the debt-based model that we're currently running. So it is slowing, but it's not yet declining. What we look for though is the spillover into other markets when households get under stress, and car sales are one of the first things that get hit. People don't buy a new car. So we're seeing those numbers weaken now. This is something that we've seen in a couple of countries, which we'll get to in just a second. But I want to mention this open era of banking. So the big four banks and all their customer data is going to be a lot more shared now. Now that works against some people. We're hearing stories of mortgage brokers telling people to go to a different bank to where they've got their credit card debt and all that sort of thing. So there's going to be more of your data out there able to be accessed starting tomorrow, I believe. Now, one of the things we spoke about in our documentary, which is now racked up over 180,000 views, so thanks to everyone that's been sharing that with friends and family, was the weakening Aussie dollar and those economic conditions. So let's keep an eye on that. The election is behind us, and a lot of people are saying that the housing clearance rate numbers are actually improving at the moment, but we're going to wait and see how strong this bounce is and if it plays out, because the actual volume of house sales is still pretty low. One of the things I do think Australia is going to have to make a decision on in the future is coming between their number one trade partner, China, and their military ally, the US. So I always get a bit disappointed when Australia gets involved in these wars and ports and whatnot. I think we should try and maybe stand in our own 2 feet and maybe not just do whatever the US tells us. But hey, let me know what you guys think of that in the comments below, with that new naval port being built in Australia for the US. Now over to the US, and the Fed have given the all clear to all the banks in their stress tests, even Deutsche Bank. So you guys know the story of Deutsche Bank that's really on their knees, carrying a lot of toxic debt, and they're trying to spit that out in another bank, or maybe even merge with another bank. But now they're cutting 20,000 jobs to try and save a bit of money, and that share price is right near those record lows still. Now, another one of the banks that we often makes the headlines is Merrill Lynch, and again, caught manipulating precious metals. So thousands of times over 6 years, this was all sort of conspiracy stuff, and it's coming to light. We've seen a number of banks now caught manipulating silver, gold, as well as other markets there. Now, the Swiss trading bloc, they have an interesting relationship. Now, they're not actually in the EU, but they do have a license to trade all these shares, or a stock market equivalent of being in the trading bloc, and that expires at the end of June. So a lot of these countries, I keep talking about this friction in the EU because it doesn't always align their different values and whatnot. So let's see what comes of that. It seems that there's all these really small issues that are starting to cause a lot of friction. Now, Carmageddon has hit Europe as well. So just as we saw in Australia, Ford slashing 12,000 jobs across Europe. Have we reached peak car is the name of this next article. And particularly in Europe, we had a cash for clunkers scheme and encouraged people to go out and buy new cars. And like a lot of things, it's very short-term focused. You borrow a lot from the future, and everyone has borrowed a lot and got into a lot of debt, but then it's just kicking the can down the road, and now it comes time to pay the piper. So what do you guys think? Have we reached peak car with everyone, having their home loan and their 7-year car loan, credit card debt? Are we too indebted now to the point where we're not going to ever see those sort of record car sales again? Now, Trump is planning on unleashing hell on Europe, as this title says here. So, look, another way to circumvent the US, hegemony, and they have control of the world reserve currency through that SWIFT payment system. And we're looking at more and more countries that are trying to get around that. And, the Iran sanctions playing into that here. So we're seeing so much tension, whether it's just the US and China or even Europe now. It's just such an interesting time for world markets. I think you guys would have to agree. Over to Zimbabwe, and they have undergone severe hyperinflation in the past, as we see that $100 trillion note. But again, we've had a really big devaluation here in that local currency, and they're probably not going to go back to the US dollar. They're probably more likely, these countries where we see that Bitcoin percentage start to increase and capture a market share of all transactions that are done in that country. So let's have a look and see if Bitcoin volumes pick up in Zimbabwe. Now, stocks and bonds sink on Bullard and Powell. We saw lots of Fed speakers come out this week, and the odds of a 50 basis point cut in July are starting to get priced in by the market. Now, the Fed accelerated pretty quickly from that zero bound up towards 2.5%. And now they're sort of using that intention and signaling, or jawboning as we call it, to try and get the markets, on their side. Now, it's not always working. I think the markets actually want to see rate cuts, but we did have a very strong end to the week as Trump and President Xi agreed to negotiations, but there's no clear path forward just yet. Trump's saying that we're not going to do any more sanctions. There's a bit of a temporary timeout. But stock markets have had a tremendous run. So I know a lot of the time it seems to be doom and gloom headlines, but after we had a pretty sharp correction in the last quarter of last year, this has been the best first half for US stocks since the dot-com era back in 1997. I wanted to finish off on the macro news with this story because a lot of people, say millennials are very entitled, but I also think at the same time, they are suffering from burnout. So it's never been really harder to get in front. You can work long hours at a pretty decent job these days, and you really do have your student debt, the cost of living. It's so hard to save that nest egg for a mortgage and that sort of thing. So, our parents maybe did have maybe lower wages, but maybe the cost of houses and that was lower as well. So let me know what you guys think in the comments below. It's a very fine line, and I know we've got subscribers of all demographics, so I'm looking forward to reading your thoughts on that one below. But into the crypto news, and we have the Golem Foundation being put forward by Golem. So this is one of my favorite projects. I'm very bullish on the entire decentralized computing industry, whether it's cloud computing, fog computing, all that sort of thing. I think we're going to see these great companies, iExec, Sonim, or a couple of other ones that are in this space, as well as decentralized file storage, really grow in the next couple of years and maybe take some market share off those global giants. Another project I've been really bullish on since I saw them at EdCon, and it's had a huge run up in price, was Synthetics. Now, they had a pretty bad week this week, and they're reliant on certain oracles to get their data feeds. So oracles are how we get data from the real world into the crypto world, onto the blockchain, and there was a bit of a error in the pair of one of their, I think it was the Korea synthetic here. So they have contacted the person that was behind this, and the bug that was arbitraging this to the point of 1,000-fold difference in price, I believe. So the team said they have corrected this, but it's never nice when we get these big errors occur in some of our favorite projects. One of the projects that has been a strong performer lately is Chainlink. Now, I want to thank Kyle, who's one of our oldest members, and he's been posting about this one since back in November 2018. It's had an absolutely tremendous run-up in price, and Chainlink are in that Oracle space that I just talked about. And even Synthetics are talking about teaming up and working with Chainlink in the future because we need highly accurate data, and they're trying to solve that problem with their Oracle model. Now, another one similar to Synthetics that we love on the channel is Maker, and I just couldn't have been happier this week. A few months ago, I did a video for our members about multi-collateral DAI and the coins that I think are going to benefit. And today we got that list. All the coins that I thought would be included are up for governance holders of that token to be voted in. So we're going to start to see, gold or even computing power, the prediction markets, basic attention token. These different industries are now stores of value. The same as we see a special drawing right being a mixture of currencies, we now have a mixture of tokens that represent different value from different industries that are going to sit behind that Maker DAI stablecoin. So it's no longer really pegged to one currency as such. Now, there was great news for Vechain this week as they've teamed up with Walmart. I believe that number of transactions has skyrocketed now with Walmart tracking a lot of food products for their safety. So look, Vechain has been one that's been lagging, but huge community. And what we've seen lately is the projects that were down the most, Vechain, Neo, Cardano, they've all sort of caught up. And that's why I keep talking about the large cap coins, the top 20 or 30. They've got a lot of money, they've got big communities, they've got the best chance to succeed, and they're all slowly starting to make good progress. Now, the IMF have been dipping their toe in this, can we have central bank issued cryptocurrencies? So they're saying maybe it could become a reality, but I think a lot of people have realized with all the Facebook news this week that it's Facebook that are now challenging even the IMF, the central bank of central banks, and saying, look, we're going to become the world bank. We've got all these users, 2 billion users. Facebook's going to become a digital country as such. So I think this is going to rub up banks and the IMF a lot more than it's going to rub up Bitcoin users. Now, JP Morgan is the latest bank to come out. You guys know my theory that every bank and a lot of corporations are going to launch their own coin. It doesn't really cost them a lot. Facebook are actually charging people $10 million for a node, so they can actually make money out of this, launch their own coin, and just collect more in fees. This is why we know that banking is one of the most profitable industries, and every corporation is going to want a piece of it. So I don't think that too many of my subscribers, at least, will be keen on using JP Morgan's stablecoin. Now, Zcash has had an interesting week. There's talks about undergoing complete rebuild. Everyone has their favorite privacy coin, and a lot of the communities say, look, mine's better than yours. That model isn't completely private. And to be honest, we haven't found a perfect answer for privacy yet. And that's why Bitcoin is still discussing what type of privacy they're going to implement and if it's going to be on the base layer or second layer. So privacy coins always going to play an important role in this ecosystem, but I've never really loved them as an investment as such. Now, Chainalysis had one of their team or whistleblower here come out on Reddit and really reveal some dirt, as it says here in the title. So for those that don't know, Chainalysis is a company that studies the blockchain. So trying to link your transactions, let's say you have a known identity on an exchange, they then link up those following transactions, and governments and surveillance, they absolutely love this because if they can join all those dots, they start to get a picture of who owns what. Now, he's saying that Chainalysis also run nodes on the Bitcoin blockchain, and they're trying to match, even IP addresses now with other wallets to further get a detail of that picture. So look, they do have a lot of paid services. This is what they do, but I think a lot of people weren't too happy about the fact that your IP is getting traced. If you send a transaction, they're trying to get all that extra data to build a picture about whose Bitcoin addresses belong to who online. Now, Craig Wright, that court battle continues to go on. This headline here is saying that there's a lack of evidence and it's in tatters. Craig did get yelled at by the judge and told not to throw paper across court, we saw on Twitter. So look, I don't want to go into this too much, but I know that Craig's fans are pretty passionate about the fact that they believe he's Satoshi, and he's so angry now because he's disappointed in the direction that Bitcoin's gone. Personally, I don't think Craig has put forward enough evidence to suggest that he is Satoshi yet, and he has stumbled up a few times again. But I know, as always in the comments, we have the Bitcoin Satoshi's Vision crowd that are hardcore believers, and they're not going to agree with me there. Now, this week we saw a number of exchanges go down just temporarily that are hosted on Cloudflare's servers. So this is always an issue. If you don't have your own keys, guys, your crypto is never 100% in your control. And this just shows that even the mainstream exchanges are at the mercy of certain servers and whatnot. And when it's really busy this week, we saw Coinbase go down. I know a lot of you love trading, but I can't encourage you enough to have the majority of your crypto stored safely in a hardware wallet. The links are always in the description below. Now, just recently this afternoon, Walton Chain have put out a bit of an upgrade, a bit of an announcement, because they did undergo a coordinated attack. So they do have a different mining algorithm to Bitcoin and a lot of other coins that have been 51% attacked. But this was actually a different exploit to their custom ASIC miners that do run the network. So I'm still reading about this. The Walton community are pretty happy that this has all been fixed with this latest upgrade. The naysayers are not happy with what's happened, and they're basically saying that that this is not good news even going forward for Walton Chain. So let's see when the dust settles what comes out of that. Now, Ethereum co-founder Gavin Wood has closed the Polkadot sale, claiming a $1.2 billion valuation. So Polkadot, Cosmos, these sort of interoperability blockchains, a lot of them do have founders that used to work on Ethereum. So this space is really heating up, but I'm not sure if anything is worth 1.2 billion before launch. When there's such hot competition, I still don't see how we can have, a dozen, and there is a dozen or more contenders at the moment for that sort of base layer. Now, there's so many projects that have a year or more head start. There's all of them have their different trade-offs, which we've spoken about before. But I do think Polkadot is one that I'm more bullish on, but I never like to chase these high valuations. So this could even go higher once we see that DOT token start to be traded on markets as well. Now, last week I spoke about the premium on the ETH Grayscale investment trust here. Now, at one stage, this was trading for a 2,000% premium, and that is because, as I spoke about last week, that these institutional investors don't want to set up hardware wallets. They just want to throw their money and get some Ethereum exposure. And I believe that there is a rush that's coming. So I've been speaking about this for our members for a while, and I did this video on YouTube for you guys as well about the race to acquire 32 ETH. Now, that was a couple of months ago. You could have got your 32 ETH for around $3,000. That's already up to $9,000 now, and I think anything around $300. This is an area that Ethereum spent a lot of time over the years. And just like ICOs force people to hold a lot of ETH, I think everyone is going to want to play a part in this staking game. Now, I've already got a lot of questions about if you can't afford that, can you pool your ETH in smaller amounts? Yes, I'll be talking about that in future videos. We're not there yet. You can't stake your ETH until at least January when they launch the new Beacon chain. And if you don't know what I'm talking about, please watch this video, but don't send your Ethereum to anyone at the moment that claims they're giving you rewards, because there's a lot of scams already trying to target people that want to earn that pooling fee. Now, this week we did see the CFTC approve Ledger X. So everyone's waiting on BACK to launch their physically settled Bitcoin futures, but Ledger X did get approval, and this sparked a pretty big rally at the start of the week. I'll talk about price action in just a sec, but well done to Ledger X, a bit of an underdog to get to market there. I'm not going to get into the specifics, but we still want BACT and the other ETFs to come online. This is still a relatively smaller player. Now, Mike Novogratz came out this week and said that he'd sold a lot of his Bitcoin at 14,000 and he wished he had sold more. That's all good to say in hindsight, but he thinks it's going to trade between $10,000 and $14,000. Now, Mike's had a few pretty accurate predictions in the past where he sold the tops and bought back aggressively at the bottoms. He's also had some pretty wildly bullish claims that didn't come true. But I guess I just wanted to highlight this story before we get into the price action, because I think there's a lot of players that are waiting to buy this dip. $8, $9, even $10,000, a nice round number. Anyone that sold that top can buy 40% more Bitcoin, Ether, whatever, if they do pick that dip correctly. So that's why I'm not expecting this to be too deep or too long. Now, I posted a warning for members. I woke up to this, and I always check the charts when I get up first thing in the morning. And Bitcoin was trading at 1,383, and these parabolas just don't end well. I've been practicing my pronunciation of that word, and unfortunately, we say those too often in crypto because we would prefer to see a nice stair-step growth. So a lot of people caught this short or did take some profits here, but that's more for the traders, and that's the message I'm trying to get across, because we don't know how brief these corrections may be. Now, I'm going to start off with Chainlink, because anyone that's been acquiring it back here for under 50 cents is now sitting on a 10 bagger as it touched nearly $5. Look, this RSI is now up at 86, 87 on the daily chart. I believe it's even higher, 93 on the weekly chart. So whenever we see those sort of numbers, there's likely to be a bit of profit taking here. But to be honest, I don't think this one is a pump and dump. So often when we see these parabolic charts, they correct right back if it's been a pump and dump on exchanges. I actually think Chainlink have achieved a lot. Again, thanks to Kyle that has been giving our members regular updates. So in that instance, I'd probably like it to move back somewhere to those moving averages, but form a large equilibrium pattern here. I don't think it's going to retrace and give this all back. Now let's have a look at the Bitcoin price action here. So we were sitting about halfway through on our cycle bracket. We know that a right-hand translation is very common in the bull market. And I was talking about how I did expect it to chop around. So I think we were trading for only $10,700 last week, and we've just burst higher. So if we zoom right out, we did pin these weekly resistances pretty perfectly, to be honest, and we saw a lot of profit taking there. So we do have the monthly candle closing, and this is going to make a big difference. I'll take off all my messy lines. How big a wick we get. So if we can have a pretty strong close in the next 12 hours or so trading, that's a really bullish outcome here. If we get a lot of weakness and we have a big long wick, look, that chances are the percentages change. That's going to be pretty hard work, and maybe take a few weeks, a couple of months of correction before we push through again. Now, one thing I'll just mention is the longs versus shorts. So zooming in here, I might just put that on the weekly chart to see it a bit better. We do know that the shorts are getting pretty aggressive and the longs have really dropped off. So there's 50% more people betting that Bitcoin is going to go down. And that was the perfect ingredients that we saw to create that really big short squeeze last time. So maybe a similar setup. Let me know what you guys are thinking. If you're not an expert, you should not be shorting these markets at the moment. Let's get those cycle brackets back up there, guys. So we're expecting this to have its next push up around the 3rd of July. But to be honest, with all these shorts, I think the market could have something in store for us. And I'd love to see a bull break here to really squeeze those shorts. Now, if we zoom in really closely here on my chart, we're just forming that equilibrium pattern. That is going to break in the next 12 hours or so. So if that breaks down, let's see how big of a waterfall dump we get, maybe into that 3rd of July cycle bracket. If we can break this level here and break the equilibrium pattern bullish, that's really good. I want to see how much these shorts get squeezed. Ethereum, it has held up stronger. It touched that magical 350 this week that a lot of traders have been looking at. I think anywhere around this 300 zone, if you get below there, we're going to have people looking to accumulate their 32 ETH, as I just mentioned. And Litecoin finished off the week really strong. So a lot of people worried as this drops off the cliff because Litecoin's still got a month or so to go to its halvening. So one thing that I'm watching with Litecoin is whether or not we can have one more push up to make new highs. Now, I did recommend taking profits when we're up here in the 130s. So a lot of people that took profits there may be looking to buy back in on these previous support and resistance lines. And that did come out of the blue and shock me a little bit there. So finally, I'll just mention the ETH Bitcoin ratio. This has continued to be weaker and weaker. We haven't seen huge volume come in just yet. So I was hoping that these fib levels would hold, but we've basically given it all back. And if Bitcoin wants to have another run, I think we're going to see all altcoins against Bitcoin really break down. We've already seen some small altcoins give back entirety of their 2017 bull moves. So I know everyone is awaiting Altseason. I think the top 20, 30, those large cap coins are going to perform really well. And when we go into those smaller cap coins, I'm going to talk about what ones that I like, what industries, and have a bit of an altcoin week this week, because I don't think we're going to get that 2017 environment where everything just goes wild, and a lot of people are expecting that. And that's not what I mean when I say alt season. I really do mean that you're going to have to be a bit of a stock picker, know your fundamentals, and pick good projects there. So I hope you guys have enjoyed that. As always, head over to nuggetsnews.com.au to join us and become a member. Smash that like button, subscribe if you haven't already, share these videos around, and thanks for tuning in, guys. Cheers.